All right, let's talk about one of the biggest goals in personal finance today, passive income. We're going to break down the real deal strategies people are using all across North America to build a little more financial freedom. And it really all boils down to one simple question.
Seriously, just think about that for a second. How can you get your money to work for you, even when you're not on the clock? It's a total game changer, you know? It's the difference between trading your time for a paycheck and building systems that make money all on their own. So what exactly is passive income? Well, put simply, it's money you earn from an asset that you don't have to manage day in and day out. But here's the key, and I really want to stress this. It is not about getting something for nothing. Nope. It's all about putting in the work or the money up front so that asset can start generating income for you down the road.
Now, there are two main roads you can take to get there. The first one we're going to explore is what I like to call the investor path. This one is all about using money you already have to make, well, more money. It's that classic idea of making your capital get up and go to work for you. A super popular place to start on this path is with dividend stocks. So when you own shares in big, stable companies, they'll often pay you a piece of their profits, usually every quarter. It's kind of like getting a little thank you check in the mail just for being a part owner of that business. Pretty cool, right?
Okay, but what if you love the idea of making money from real estate, but you don't exactly want the headache of being a landlord? That's where REITs come in. REIT stands for Real Estate Investment Trust. You're basically investing in a company that owns and manages a whole portfolio of properties. Think office buildings, apartment complexes, and you get a slice of the rent they collect.
And for anyone who's maybe a little more cautious with their money, there's always the much safer route, high-yield savings accounts and bonds. With these, you're pretty much just lending your money to a bank or a government, and in return, they pay you interest. It's definitely slower, for sure, and more stable, but it's an absolutely foundational piece for a solid passive income portfolio.
And what's great is when you lay it all out like this, you can really see the trade-offs. You see, on one hand, dividend stocks have higher potential returns, but they also come with more market risk. REITs, they give you that real estate exposure with a kind of medium level of risk. And bonds, well, they're the bedrock. Lower risk, but also lower return, which makes them perfect if your main goal is just to preserve your capital. It all comes down to what you're comfortable with. But what if you don't have a big chunk of cash to invest right now? Well, that brings us to our second major approach, which I call the builder path. This one isn't about investing your money. It's about investing your time, your skills, and your effort to create a brand new income-generating asset totally from scratch.
Now this is a really important distinction. The builder path takes a lot of work up front. I'm talking months, sometimes even years, before it gets to be truly passive. You are literally building an income engine that once you get it up and running can keep generating money for you for a long, long time with just a little bit of upkeep.
Probably the most traditional builder strategy out there is owning rental properties. I mean, this is a real, tangible asset you can see and touch. The idea is simple. You buy a property, find some great tenants, and the rent they pay every month becomes your cash flow after you cover the mortgage and all the other expenses. And yeah, it can seem like a lot, I get it, but the whole process can be broken down into these 4 key steps. It all starts with getting the capital for a down payment. Then you find the right property, you place a fantastic tenant, and finally, you manage the property and start earning that consistent income. Every step is a project, sure, but it's a very clear path to follow.
Okay, so now let's see what this builder path looks like in the digital age. The modern approach takes you online where you can create digital assets. Things like a YouTube channel, a blog, maybe an online course. The amazing thing about these is that they can reach people all over the world and earn you money 24/7. Yeah, even while you're sleeping.
And check this out. This shows you just how much variety there is online. You could create content for YouTube and earn money from ads, or you could build and sell your own digital products, like an ebook or a piece of software, or there's affiliate marketing, where you earn a commission just for recommending products you like. The possibilities are, well, kind of huge.
So, we've laid out the 2 main philosophies here. On one side, you have the investor, who uses capital. On the other, you have the builder, who uses their time and skills. And that brings us to the biggest question of all. What's your strategy going to be?
The choice really boils down to this. The investor path is faster if you already have the money, and it's generally less hands-on day-to-day. The builder path, on the other hand, demands a huge upfront investment of your own effort, but the potential upside is basically unlimited, and you can start with very little money. Neither one is better, they're just different roads leading to the same destination.
At the end of the day, the journey toward passive income starts with one single, deliberate step. It doesn't matter if it's opening an investment account or just brainstorming your first online product. The most important thing is just to get started. So looking at these paths, I have to ask, what's your first step gonna be?